Skepticism grows despite China stock rally. China stock rally, which has pushed the Hang Seng China Enterprises Index up over 35% in a month, is being met with skepticism by global fund managers like Invesco and JP Morgan. While Beijing's stimulus measures, such as interest rate cuts and liquidity support, have boosted confidence, concerns remain about overvalued stocks and the sustainability of the gains. Analysts warn that further policy actions are needed to maintain economic growth and stabilize the housing market. HSBC remains cautious, expecting slower GDP growth in the coming years, while Goldman Sachs remains optimistic, forecasting an additional 15 to 20% rise in Chinese stocks if more policies are implemented. Despite the bullish sentiment from some, uncertainty around global events, including U.S. elections, has led many to approach the rally cautiously. Memecoin surge fueled by Supercycle hype. Memecoin saw a notable surge as social chatter about a potential Memecoin Supercycle trended across platforms like X. Ethereum-based MOG and Solana's POPCAT both jumped over 12%, while BNB chain Simon's CAT gained 10%. Smaller tokens, such as Giga, SPX6900, a parody of the S&P 500 index, and FWOG, rose more than 20%. Cat-themed tokens continue to outperform dog-themed counterparts, solidifying their appeal among speculative traders. This meme coin rally comes at a time of low volatility in traditional crypto markets, with rising skepticism toward tokens backed by venture capital, which many retail traders now consider overpriced. Despite the surge, some market participants argue that meme coins could lose momentum if Donald Trump wins the 2020 for U.S. Oil prices dip after last week's sharp rise. Oil prices declined on Monday after experiencing their steepest weekly rise in over a year, as concerns about oversupply outweighed fears of Middle East conflict disrupting oil exports. Brent crude futures fell 0.36% to $77.77 per barrel, while US WTI slipped 0.26% to $74.19. Last week, Brent rose more than 8%, the biggest weekly gain since January 2023, while WTI surged 9.1%. The recent rally was driven by fears that Israel might strike Iranian oil infrastructure in response to a missile attack. However, as the situation remains uncertain, many investors took profits, leading to the price dip. Analysts believe the likelihood of a direct attack on Iran's oil facilities is low, with OPEC Plus having enough spare capacity to mitigate disruptions. Weak global demand, especially in China, and OPEC's decision to maintain production cuts have further capped potential price gains.